Investing was supposed to be easy. At least that's what they all said. I had read the books, attended the seminars, and followed the gurus on social media. The charts, the figures, the promising predictions, it all seemed so straightforward, so within reach. How could anyone fail when the path to riches was clearly marked? Yet as I stared at the red numbers on my screen, the weight of my decisions pressing heavily on my chest, I realized just how deceptive those promises were. But let me take you back to where it all began, to the moment I decided that investing would be my ticket to financial freedom. I was 28 years old, fresh out of a dead-end job that had drained the life out of me for the past 6 years. My friends were settling down, buying homes, and talking about 401 Ks, and I was struggling to figure out how I would pay rent next month. The anxiety of not having a clear future plan gnawed at me, but I was determined to change my fate. That's when I stumbled upon the world of investing. It felt like a revelation, a beacon of hope shining in the murky waters of my financial uncertainty. Stocks, bonds, real estate, cryptocurrencies, it was all foreign to me, yet intoxicatingly enticing. I convinced myself that with enough research and a bit of luck, I could turn my small savings into a gold mine. I started small. The first few weeks, I immersed myself in learning. I watched YouTube videos late into the night, absorbing every nugget of wisdom from self-proclaimed experts. Diversify your portfolio, they said. Buy and hold, others advised. Timing the market is a fool's game. Armed with these snippets of knowledge, I felt ready to dive in. My first investment was in a tech stock everyone was raving about. The company was innovative, its growth potential astronomical, at least according to the analysts. I threw $5,000 into it, nearly half of my savings at the time. And then I waited. For the first few days, nothing happened. The stock price hovered around my purchase price, and I told myself that patience was key. But then, one morning, I woke up to a 15% drop in the stock price. Panic set in like a wildfire. I wasn't just losing money, I was losing faith in my ability to navigate this complex world of investing. I scoured the internet for answers, searching for any scrap of information that might explain the sudden drop. Analysts had turned bearish on the stock. A competitor had released a superior product. My heart raced as I watched the price sink lower and lower. Within a week, I had lost nearly 30% of my investment. And so began my downward spiral. I couldn't sleep, couldn't eat. The fear of losing everything consumed me. I kept checking the stock price every few minutes, hoping for a miracle that never came. The voices of the experts that once filled me with confidence now mocked me in my head. Timing the market is a fool's game. Yet here I was, a fool in every sense. In a desperate attempt to salvage my investment, I sold the stock at a loss, cutting my losses before they could get worse. My $5,000 investment was now worth a mere $3,500. I was devastated. The sense of failure was overwhelming, and I wondered if I had made a terrible mistake by venturing into the world of investing. But I wasn't ready to give up. Not yet. There was a stubbornness in me that refused to let go of the dream. I couldn't stand the thought of returning to my previous life of financial insecurity, working a job I hated just to make ends meet. So I doubled down on my efforts, determined to learn from my mistakes. I realized that my first mistake was thinking that investing was a quick way to make money. It wasn't. It was a long game, one that required patience, discipline, and a strong emotional fortitude. But most importantly, it required a plan, a real, well-thought-out strategy, not just blindly following what everyone else was doing. I went back to the drawing board. This time, I focused on understanding the basics, the fundamentals that drive the market. I read about economic indicators, learned how to analyze a company's financial statements, and studied the historical performance of different asset classes. The more I learned, the more I realized how little I knew before. One of the most important lessons I learned was about risk management. The stock market is inherently volatile, and no investment is ever without risk. But that doesn't mean you can't protect yourself. I learned about diversification, not just spreading my investments across different stocks, but across different asset classes, such as bonds, real estate, and even gold. This would ensure that if one investment tanked, it wouldn't wipe out my entire portfolio. I also started to understand the importance of emotional discipline. The fear that had gripped me during my first investment was a natural reaction, but it was also counterproductive. The market is driven by emotions: fear, greed, euphoria, panic, and those who can master their emotions are the ones who succeed in the long run. I began to practice mindfulness, focusing on staying calm and rational, even when the market was anything but. As I started to rebuild my portfolio, I adopted a new strategy: dollar cost averaging. Instead of trying to time the market, I committed to investing a fixed amount of money at regular intervals, regardless of the market's ups and downs. This allowed me to take advantage of market dips without the stress of trying to predict when they would happen. But even with all these new strategies in place, I still faced challenges. There were times when the market would take a nosedive, and the old fear would start to creep back in. But I reminded myself of the lessons I had learned, of the importance of staying the course and not letting short-term volatility shake my confidence. And then, something incredible happened. After months of disciplined investing, of sticking to my plan and not letting my emotions get the better of me, I started to see results. My portfolio began to grow, slowly at first, but steadily. The gains weren't astronomical, but they were consistent. For the first time, I felt like I was in control, like I had a real shot at achieving financial freedom. But the journey was far from over. One of the hardest lessons I had to learn was that success in investing is not just about making money. It's about not losing it. I became more cautious, more methodical in my approach. I no longer chased after the latest hot stock or got swept up in the hype. Instead, I focused on building a solid, diversified portfolio that could weather the inevitable storms of the market. My confidence grew as my portfolio did. The fear that had once paralyzed me was now a distant memory. I had learned to embrace the uncertainty of the market, to see it not as a threat, but as an opportunity. I had also learned to be patient, to play the long game. Investing was no longer about getting rich quick. It was about building a secure future, one step at a time. But perhaps the most important lesson I learned was about resilience. The road to success is rarely smooth, and investing is no exception. There will be setbacks, losses, and moments of doubt. But those who succeed are the ones who don't give up, who learn from their mistakes and keep moving forward. My journey was far from over, but I had come a long way from that first disastrous investment. I had learned that most people fail at investing not because they lack knowledge or resources, but because they lack the right mindset. They are too easily swayed by emotions, too quick to panic, too eager for instant gratification. But investing is a marathon, not a sprint. It requires patience, discipline, and a willingness to endure the inevitable ups and downs. Today, I can proudly say that I've succeeded in investing, but not in the way I originally imagined. It's not about the money I've made, though I'm grateful for the financial security I've achieved. It's about the lessons I've learned, the personal growth I've experienced, and the resilience I've developed. I remember a particular low point about 3 years into my journey. It was during a market correction when even the most confident investors were rattled. The news was filled with doom and gloom, predicting a major recession. My portfolio took a hit, and I found myself on the verge of slipping back into old habits, panic selling, retreating into fear. But something inside me had changed. Instead of succumbing to the fear, I took a deep breath and remembered my strategy. I reviewed my investments, reassessed my risk tolerance, and reminded myself why I had chosen each asset in my portfolio. Then, rather than selling in a panic, I saw this downturn as an opportunity. I had cash reserves specifically for moments like this, and I used them to buy more stocks at discounted prices. It was a move that took every ounce of courage I had, but it paid off. As the market recovered, my portfolio not only bounced back, but grew stronger. It was a turning point, a moment that solidified my belief in the power of long-term investing. It wasn't just about having a plan, it was about having the conviction to stick to that plan, even when everything around you is screaming to do the opposite. Now, I'm in a place where I can help others who are just starting their journey. I've become a mentor to friends and family, sharing the hard-earned lessons that have guided me. I tell them about the importance of education, of not just jumping in because it looks easy or because someone else said so. I emphasize the need for a strategy, for understanding risk, and most importantly, for keeping emotions